Hi everybody, this is Gary Wilson and welcome to tonight's live Investor Agent webinar. Also, welcome to any of you who have been in any of the other training programs, whether they be for flipping, flipping for profits, rental profits without the pain, turning rental problems into real estate profits, which is of course about managing rentals, and wholesaling so everybody wins, which is how to wholesale correctly and work with wholesalers so that there's no damage left as a result. Also, welcome to all of the new folks, all the veterans, everybody from the different countries. We're going to be adding students from different countries here a little bit more aggressively after the summer. Starting in late September, I'll be traveling to London and looks like Poland, Germany, France while I'm over there. I've been invited to teach over there. So welcome to everyone, no matter where you're from, if you're an investor or if you're an agent, no matter what brokerage company you're with. We should have folks on here from several different brokerage companies. Welcome aboard. For those of you who are new, you're going to see that you are by default muted. That's systematic, and it's because with now 42 people on, there's no way to have everybody live audio at the same time. Just wouldn't work. So we will unmute you from time to time so you'll be live, and everybody will be able to hear you. Okay, so it's kind of good to do that every now and then. We do that probably once or so, or once a month or so. Any case, a little bit more housekeeping. Definitely, please look for the email that comes out after every one of these the very next day from Beverly. It not only gives you the webinar schedule, it gives you a recording of this webinar. It also gives you updates to the system, updates to the content, which seems to happen on a regular basis. Okay, and also it's a reminder to please get your profiles put on the community site. And the reason is, guys, is most of you are agents. Many of you are agents and investors. We have a few who just simply are investors. But what's happening is we're attracting a lot more international investors, and it's going to really be more apparent once I get overseas again. And these folks need to find you. They trust you because we've trained you. Okay, they want to work with you because you've been trained to work with investors. Also, if you speak a foreign language, absolutely please notate that in your profile, okay? Because they want to work with people who they can more easily communicate with, all right? There's a lot of risk for them, and the easier we can make it for them, the better. So please do your part and help me help you, and I appreciate that. Also, next week's webinar is Thursday night, the 22nd. I will be in Pittsburgh. My daughter's going in the hospital again. I'm going to be there with her, and I'll do this that night. But that one, remember, is a special purpose webinar. It's for the people who are interested in learning how to do the classroom. We do this every year. We're a little bit behind this year. Last year we did it in May. We've modified it and dramatically improved it. The conversion rates on this are 93+%, okay, on the classroom webinar. However, we do ask that you've either done a workshop at least at a minimum, and if not, at least watch 2 webinars. The one from February 2016, it's either the 18th or the 25th, I can't remember which one, that describes how we actually do the workshop using Meetup and so forth. The other one is a special purpose webinar just on meetup.com, and on the members section of the website, My Investment Services website. It's just below the community site. You'll see it right there. At a minimum, please watch those two if you haven't already. Okay, and be prepared for that next week. It is a special program. It's going to take involvement more on your part and more on my part for several weeks. So we're pretty serious about this. We really want people who are serious about making that part of their business platform. Speaking of webinars, we had a challenge, I think that was last week, because of where I was, the Wi-Fi just wasn't strong enough. There is a recording I want you to watch. It's from early December 2015. I think it's December 10th, and that has the same exact subject on there. And it's clear, and you can see how to use all those websites we brought up last week. So definitely watch that. If you weren't able to get through the one from last week, we did make it complete. We did send it out, but this one is going to be a lot easier to watch. Okay, so any case, I believe that is it for the moment. Without further ado, I want to introduce Paul Ritter. For those of you who are new, Paul and I have known each other for quite a long time. I don't know how long, Paul. I think I was probably 1 year old when you and I met, and I think you were 3. Is that right?
Somewhere around there, yeah.
Yeah. So in any case, Paul and I have known each other for a while. I've used him extensively in my business and for a lot of my clients. And if you don't know him, he spoke to us several months ago. Tonight is a different subject. So without further ado, Paul, I'd like to introduce you, and if you could just give a brief introduction to yourself, and to go ahead and take the floor. Is that okay?
Yep, I'm good. How is my sound, Gary? Can you hear me okay?
Yeah, you're fine. Yep.
Okay. And how much time do I have?
There are now 46, and there were 146 registered, but the maximum is 100. So we got half.
How much time do I have?
Oh, as long as you want. This was designed to be about an hour. Generally, it's like 45 minutes of material, and then a little bit of wrap-up Q&A at the end. But if you want to go long, we've had them go as long as 2 hours. It's really just whatever you think is best for the students.
I have 33 slides. I'll go at the pace of about a minute a slide, so it'll take about 30-some minutes. And then I'm going to reserve a lot of time at the end for questions. So, and as far as one more question for you before I start right into the webinar, Gary, the attendees, are they mainly real estate investors or realtors or mortgage brokers? What's the mix?
Yeah, the group is predominantly real estate agents who work with investors and in the investors themselves. And the good news is many of them are both. They're agents and investors.
Okay,
so
all right, so thanks.
Yeah, so your subject is very, very appropriate for this group of people.
Okay, a little bit about my background. Actually, I've been a realtor before. I am a real estate investor. I own a credit repair company. I also own a tenant screening company, and I've been a mortgage broker and owned and operated several different mortgage companies. So that's kind of the gamut that I run. I've also written underwriting software that helps to qualify people. So more on that as we go along, but that's kind of some of my credentials. I go way back with Gary, as he mentioned, and it's been a long, wonderful friendship that we've had. And sitting here in Pittsburgh, Pennsylvania, celebrating the Penguins' victory here, and looking forward to the parade tomorrow. But other than that, let's go ahead into the seminar or the webinar this evening. And it's a fairly simple one. There'll be some gold nuggets in there for just about everybody, and no matter what walk of life they come from, real estate investor, realtor, or so on. First off, little housekeeping. The name of my credit repair company is My Credit Team, and obviously the website to visit us there would be mycreditteam.com. The phone number you see on this screen right here is my personal cell phone number. So I only give that out to Gary and his universe. Please don't give that to, if you're referring people to me, don't give that number. There'll be a number up on our website to provide for any tenant buyers or people that you're sending to our company. It's better off just sending them directly to our company.
Okay.
All right, so with that, I'm going to go through these slides rather quickly here. It's tough to know, and I'm going to read some of them verbatim. Let me minimize this, it's kind of in my way. I'm going to read some of them verbatim, and I'll throw in some nuggets as we go along. It's tough to know. I think I actually missed a slide here. No, I didn't. Okay. It's tough to have credit issues and applying for new credit. Butterflies float around in your stomach as you await the decision on whether or not you're approved or declined. So that process, it doesn't have to be such a mystery. Let's go through what they're looking for. And I'm going to tell you from a couple different perspectives, and then I'm going to throw some things in about credit enhancement and how we work our magic. And by the way, we do have a tenant screening company. Gary and I, as he alluded to, we did a presentation here a couple months ago, so you might want to go back in the archive and look at that. It's ideal for people who are real estate investors who are trying to do rent-to-owns. That was a wonderful webinar because it covers the helping people calculate out their debt-to-income ratio analysis and the affordability of the property, and then marrying that all with the credit repair so that we can get people across the finish line so rent-to-own candidates actually become homeowners. So look back in the archives and go over that. So with that, let's go through this. This presentation tonight is not going to do anything with screening. It's going to be focused mainly on credit and how to improve your credit score. In most cases, when you're declined, there's no real reason is given to why, and there's no solutions presented to you as to what you can do to become approved. Today I'm going to reveal to you exactly what lenders are looking for. As I mentioned, I've got quite a breadth of experience in this industry, in being in the mortgage industry. And you will learn things that you can do to ensure yourself that you will get approved for your loan or the loan that you seek. Okay, so mortgages don't need to be such a mystery. Mortgage criteria has changed greatly over the last few years, and the great news is you can still get a home loan with challenged credit, and there are some 100% financing options available. Mainly the USDA program. You can actually do it up to even 105% of the loan, and it does allow for having somewhat damaged credit. You don't have to have a perfect score, an over 700 score in order to get a USDA loan. So what criteria do mortgage lenders look for? Today, you can obtain a mortgage with a 620 credit score with most mortgage brokers, assuming they have the FHA program. If you apply with your own bank, and banks are a bit tighter, they're going to need to have a score of about 650 or higher. 620 is the minimum score that you'll need, and it's near impossible to obtain a loan with a score lower than 620 unless the planets align for you, and you can get loans done under 580, and you'll hear a lot of mortgage brokers saying, hey, send us your loans at 580. It'll be few and far between that actually get approved, though. When I say planets need to align, you need to have a very large down payment, be on your job for a long time, and be able to prove that, and even have alternative means of credit and so on. Most mortgage loans that are available are government-backed loans, such as FHA and conventional Fannie Mae and Freddie Mac loans. These loans have similar qualifying criteria, similar to each other. You will need to have a clean credit history for the last 12 to 24 months, but you'll definitely need to have a clean history with no late payments for the last 12 months. So the first statement there is, if you're looking for a USDA or FHA loan, the second statement is more conducive with if you're looking for a Fannie Mae or Freddie Mac loan. So even if you think you have this, check your credit to ensure you don't have any old collections showing up. When I say check your credit, if we don't all on this call have access to Credit Karma and freecreditreport.com, we should go and get it tomorrow or today, this evening as well. Because the reason I suggest both of those sites is because Credit Karma handles TransUnion and Equifax, whereas freecreditreport.com handles Experience. And between the two of those websites, you will have all three of your credit reports. They are free. Love that word, free. And you can get your credit report on a monthly basis. Now, what you will get there at freecreditreport.com, you're not going to get your score, but you're going to get a wealth of information and data. You'll even get your account numbers. Whereas with Credit Karma, you're not going to get your account numbers, but you get a score for both your Equifax and your TransUnion report. The score is based upon Vantage 3, which is not a FICO score. It is kind of like meters to yards. Both measure distance, but they do it in different manners. That's a kind of a simplistic version of the differences between Vantage 3 and FICO, but both spit out a number, and that number measures risk. It's just on a different scale. So we're trained in here in our office to understand the differences thereof. And so when people come to us and say, I've got a 700 credit score, I should get a loan, that's not necessarily the case, especially if it's a Credit Karma number. Collections from years ago commonly will be reported against you, and they can be reported as if they are brand new collections. and this can prevent your chances of getting approved. Now, when we talk about brand new collections, this collection could be years old. There's a thing in the industry called re-aging debt, and it has to do, it's primarily with medical, but it happens in utilities and so on. But what happens is whenever you sell the servicing rights of a debt from an original creditor to a servicing company, a collection company, the collection company, what they do is the original creditor intentionally omits the date of last activity when they sell this, and they do that for a reason, because now the debt has more value to the company who has assumed this debt, and more value in the sense that now if the new company plugs in the date of last activity to be the date that they obtained the debt, effectively what they've done is they've re-aged that debt. Highly illegal, immoral, and unethical. But we know how to basically press the ear of the credit collection companies to the fire to make them prove that their information is accurate, timely, and verifiable. If it fails any of those tests, then it has to be removed. So this concept of aging these debts is highly effective in terms of having people get turned down for loans. And you say, well, gee, why would a credit reporting agency give a care about whether or not someone gets turned down for a loan? Well, guess what? If they get turned down, they're going to rerun their credit more often going forward. And they get paid, the credit bureaus get paid each time these credit reports are run. And it's all about money for them. So that's why people with bad credit, banged up credit, they make more money off of them than they do with people with good credit. So many lenders even require your history. Excuse the background noise. Gary, you might want to talk for a little while here. I got an ambulance coming past. Sorry, guys. Actually, it was a fire truck, and there may be another one behind it. Many lenders even require your history be clean with no late payments for 24 months. Mainly, they are looking to see if you've reestablished yourself since your problem. So in the world of FICO, what matters most is what you did most recently. Things that are from your yesteryear, from your past, are faint in terms of what their contribution to your score. Things that happened yesterday, it's kind of like shining a real bright light on those elements, and that's why our score plummets whenever we get a new collection or a new charge-off or a new late payment on our credit report. And you think of, everything, you think of the entirety of a credit report and how it all can get flushed down the drain with just a late car payment or something like that. So make sure you reestablish your new credit history for this reason. It's just as important as not having any negative credit items. Okay, so lenders need to see on your credit report that you have reestablished yourself and you are paying your accounts as agreed. Okay, no mystery there. Foreclosures on your credit report will keep you from qualifying for 3 years from the date of the foreclosure completion, not the date that they filed it. Bankruptcies require 2 years before you can qualify. And similarly, it's also from date of completion, not the date that you filed the bankruptcy. If you have no negative items in the last 24 months and you've reestablished credit, you should get approved with a score of around 620 unless you have a recent foreclosure or bankruptcy. That would mean even if your score is high enough, you still don't qualify from an underwriting guideline standpoint. So there's underwriting guidelines and there's score. And both of them can, either of them can disqualify you. So both of them have to work in conjunction with each other. The auto industry is kind of a little different breed. Lenders also have radically changed the criteria to qualify for car loans. Most lenders want to see a 600 score or higher with some money down. But you might be able to qualify with a score of around 575. And that 575 is because they kind of have this thing that they use in the background. If you have recent auto history, it will determine what your score lower threshold needs to be. If you have a paid as agreed automobile loan. It's now open. Your chances of approval are higher. So they kind of have this little forgiveness thing, and that's what basically lowers the threshold down for the auto industry. If you have no recent auto history or recent negative auto history, you will need a score higher to qualify. You might also need more money down and a credit score of above 600, all saying basically the same thing. Reestablished positive credit becomes more important if you have negative auto marks on your report. Other loans. Home improvement loans, non-secured loans, and signature loans are harder to qualify. Here in Pittsburgh, we use a company called One Main Financial. That's where I send a lot of our business to. And basically, these are signature loans, and the characteristics of these loans, they're a little bit higher interest rate, and sometimes you need to have some sort of collateral for them. I've seen them take like a backhoe, and put that up against one of those loans. So there's all kind of different ways of getting those signature loans done. Most lenders for Fannie Mae or Freddie Mac loans require a 650 score or higher. Many lenders require 700 or 720 score to qualify, and you must have recent positive history with no recent negative accounts within the last 2 years. Okay. Okay, and we'll go on to the next slide. Okay, you can find some smaller finance companies who offer secured loans. These loans usually range between $1,000 and $2,000. Secured loans, RVs, campers, ATVs, anything like that, they'll secure it using such collateral to qualify. Plus, your interest rates on these type of loans are much higher. I've seen them in the range of 30% before. Okay, so meat and potatoes. 35% of your credit score is based upon your history, your credit history. So your secrets for loan approval. Work with a reputable and professional credit enhancement company to get greater results faster. Not all credit repair companies are created equal, folks. I like to call our organization a credit enhancement company. The difference is credit repair, I define that as the heads down disputing of inaccurate information that's prevalent in this industry. Credit enhancement includes credit repair and all the counseling that's needed to help people to understand age of credit, mix of credit, and balance limit ratio. And when I talk about balance limit, I'm also throwing into that equation new credit too. So credit enhancement, see, 35% of the score, as we mentioned, is the history. That's basically affecting everything by using the dispute resolution process. 30% of the score is your balance limit ratio, which can be obtained by getting new credit, knowing what to pay down, which accounts it's important to pay down, and how to do that so that it shows on the credit report in a timely manner, so that we can see that whenever we go to run the loan or do the mortgage application. So use a credit enhancement company that understands all those elements and that gives you an end date on the date that you start and disputes all the inaccurate information every time they dispute. So when I said not all credit repair companies are created equal, that's because if you've heard of companies like creditrepair.com, Lexington Law, or many of the others out there, they all have a similar business model, and that model goes kind of like this. Let's keep people on the hook for as long as possible and extract as much money as we can from them, because that serves our bottom line. Now, it doesn't serve the customers as well, but what happens is as they dispute one thing at a time, let's just say your client has 10 negative items, which is quite common on each credit report, which infers that they have about 30 negative items across 3 credit bureaus. You can very quickly see if they dispute one thing every 45 days, that candidate's going to take years to accomplish their goals. So what we do is, in that particular case, we would dispute all those negative things all the time. So the first pass, we would dispute 30 items. Typically, with the first pass, you're going to get about 35% of the items removed from the credit report. In the second pass, you're going to get another about 12, 13%. and then it declines over time. And over the life of the time that people are with us, we're getting about 70% of the negative items removed off of the credit report. But in the case of disputing one thing at a time, what happens is now you're really putting everything way back, and that's why people commonly come to me. When I probably had, I would say, over 200 people that come to me that have been with Lexington Law in the past, and I would say probably about 198 of them have come and joined my company. I've never lost anyone to Lexington Law, and they all say the same thing to me. They're taking way too long to accomplish my goals. And that's basically why I say that's because their business model is to dispute one thing at a time. So I can't emphasize this point enough, because this is the difference between being successful and being unsuccessful. This is why my industry has a black eye, for exactly this reason. Because people in this industry, people that do the work that we do, are very money-oriented, and they're basically wanting to extract as much money from the clientele, your clientele, as possible. So whenever you send your people to us, know that they're going to get this. Everybody gets the same VIP treatment, and they're going to get all disputes done all the time. So it gets done much quicker, so we can all accomplish our goals. Okay? Okay, and also you need a good credit repair company should custom tailor those disputes. So we have a database to pull from. We have done this for thousands of people. This is not our first rodeo. So we're going to look at what our database, what works today is not what was working yesterday and may not work tomorrow. So we keep tabs on what works, for example, against Citibank and in consideration of a medical debt as far as TransUnion is concerned. So as we run people through our system, we take aim, and we're very careful to make certain that we stay on top of what's working. Some credit repair companies intentionally directly dispute toward the least harmful accounts first to keep their clients on the hook longer. And many credit repair companies use the same letters and the same approach for all clients. And there's nothing good about that. Only work with a company who provides you custom disputing, and this way you can have a higher likelihood of removal of negative, inaccurate information, resulting in a faster loan approval. You should work with a company who can deliver you credit improvement results consistent with your financial goals and loan approval in a given time frame. If your credit repair company doesn't ask you what your goals are, that should be a dead giveaway. That should be a red flag right there that their interest may not be aligning with yours. And if they don't give you an end date, a time frame, an end date on the date that you start, I would say run to the next credit repair company. Okay, so that's actually a picture of me down there, folks. I actually did a little video a while back about disputing things online, and I titled it Do-It-Yourself Credit Repair. Guess what it's not about? It's not about doing-yourself credit repair. It's about, that's not entirely true. What it's about is why you should not do your own credit repair. And it basically tells you about eOscar and how the system works behind the scenes and so on and so forth. So it's not revealing all the great secrets and giving you all the templates to use. It's simply basically cautioning you if you do it, then know the rules that you're playing under and why your disputes perhaps are not going to be taken seriously. The credit bureaus actually make it easy for any consumer. Oh, by the way, if you want to watch that video, just go onto YouTube and type in Do-It-Yourself Credit Repair and then put my name behind it, Paul Ritter, and you'll see my smiling face there. And I think it's probably about a 12-15-minute video. So back to the credit bureaus make it easier for consumers to dispute online. Did you ever notice if you go to like Credit Karma or Annual Credit Report that you're going to see on there it says dispute right now, and the reason all these flags come up and they want you to dispute is because they're money grubbing companies. The credit bureaus are actually not part of the government. They're companies for profit. And what they're trying to do whenever they do that is they want people to dispute online because they get paid 35 cents each time from the creditor to have a dispute done. And whenever you dispute online, you're playing in their sandbox. You're clicking a button, so their computer, it triggers an EOSCAR system, electronic verification module, from the credit bureau's computer to the creditor's computer. So what happens is, as they do that, now they get paid, the credit bureaus get paid 35 cents, and the same information that that was uploaded from the creditor to the credit bureau is what you're challenging, and the computer is always right, and that's why it doesn't come off. And that's why they want you to do it that way, because they didn't have to pay anybody to look at it. They simply got to, because you're electronic communication, they got to bill the creditor 35 cents. And guess what? If you've got 10 items, they just made $3.50 just by sending out electronic communications. What a racket. And that's the reason why they make it so convenient. So the Fair Credit Reporting Act requires that all disputes receive a reasonable investigation. And what I just explained to you about the EOSCAR system is really not a reasonable investigation, but it is deemed so by the governing parties, the Attorney General and the CFPB, Consumer Financial Protection Bureau, at this stage. But what also is a reasonable investigation is whenever a letter is sent off that someone actually has to open up that letter and do something with it. And that's where we're at, folks. Now it goes through a different process and it triggers a different set of results. And that's the secret sauce. That's why when you work with a good credit repair company, that's why they're going to be way more successful than the average consumer. So disputing and deleting negative credit items reduces the number of negative payment accounts you have, and your score increases. Kind of like a gas gauge where you got full on one side, empty on the other, and then everything in between. So the more you take away from the negative side, the brighter the light that shines on the items that remain that are good. And if you, at the same time, enhance your credit by getting some new active trade lines that are good ones, so now the score or the credit report becomes more volatile, and the scoring system can go up or down quicker as we start to eliminate the negative items. But if your credit report is saddled with a lot of negative items, it's kind of cemented down, and there's not going to be much swing even if we bring a new item into play. So hopefully all that makes sense. So let's add some positive credit. Lenders are looking to see that you have reestablished your new credit. So if you do not have new credit established, you're just hurting yourself as bad as you have with your recent late payments. Okay, so getting approved for new credit so you can start to establish new. So it kind of feeds on itself. So once you get that first, it's like everyone wants to let somebody else be the first one or the guinea pig to lend a person with damaged credit to give them a new trade line. And so they all sit there kind of peered on the fence waiting for someone to take charge. And when you get that first item that is good on the credit report after having a life event like a divorce or an accident or something happens and losing a job, and then you turn it around and you start to get new credit, the floodgates open and you start to get all these offers from all these other creditors. But what you want to do is you want to be careful which offers you select. So this is one thing I really like a lot. And if you're interested in this, if you want me to send you the link that I have on the screen here, please send something to paul@mycreditteam.com and ask me to send you the Jewelers Club link. We'll take a minute and talk about this because this is so substantial. I pass this tip on to so many people, and I have seen it raise people's score 30 to 50 points in a matter of a couple weeks. This Jewelers Club card, here's the kind of the parameters of this card. This is how it works and what it does. First of all, in order to be qualified for this card, you have to have $99. Basically, it's an application fee, $99. Secondly, you have to have no open active bankruptcy, no excessive tax liens, which is usually about more than $5,000 in tax liens, and then no open active child support arrearage payments. And if you have those three things and $99 in a heartbeat, then you will get this Jewelers Club card. Restrictions with the card. You will only be able to buy things online through their online catalog. So you cannot take this card and go to Tahiti and sit Mai Tais on the beach. Doesn't work that way. It's a $5,000, let me say that again, $5,000 unsecured line of credit. Big difference between secured and unsecured. Secured, no one took a chance on me. I took my own $300, I plopped it down, Household Bank, First Premier, somebody like that gave me $300 worth of credit. Okay, and additionally, they charged me probably about $100 for application fee, and then they charged me $7 a month, and whether I've charged something or not, and that all gets greeted with a 29% interest rate. Not the best way, because FICO sees right through that. FICO sees that no one took a chance on you. But with this $5,000 unsecured line of credit, it is a totally different ballgame, because now we're talking major credit versus minor credit. Major credit over $1,500 limit. Minor credit under $1,500 limit. So that's why you get a score rebounding so quickly. So if you want to open the floodgates and you want to get a lot of good credit, get cars and things like that rather quickly, if you don't have credit, don't start out with the little secured cards. Go for the big dog. Go for this Jewelers Club card. Other things, you have to buy $100 worth of stuff in order for it to report. And during the first year only, whatever you buy, you have to pay off 50% of the balance in the very next month. So that security mechanism is built into place so that you don't abuse the card. So if you follow those simple rules, you get this $5,000 unsecured line of credit. So again, think of your own credit report. If this fits for you, great. If it fits for somebody that you know, I mean, we can all play around with trying to get an authorized card together, but FICO sees right through all that stuff. It sees through, you know, this doesn't fit your credit report, so it doesn't give you as many brownie points as you think, even if it's a large line of credit. This card will be in the person who applies name, and they will see a rapid score improvement. Again, I haven't seen scores improve less than 20 points for something like this. It's typically right around 35 to 50 points. Oh, by the way, if you get the card on before the 25th of the month, it will report on the 5th of the next month. So you have your dates with a stake in the ground right there. Okay, so if you have one of the three nasties that I mentioned, which is the open active bankruptcy, the tax liens, or the child support payment, you still can go and get a secured card by going to my website there and clicking on our credit building tab. I've vetted those cards because I know that they report to all three credit bureaus. Ideally, add new positive credit with high limits. And if you owe more than 30% of your credit limit on a card, you will lower your score. So be careful of those $250 to $500 cards, especially that $300 First Premier card with the fees that are high, because those cards, they're given to you with a low limit, and boy, as soon as you apply, you got 125 bucks on there, so you're already at like 40% utilization on the card, depending upon what its limit is. So that suppresses your score more than it helps it. So using a higher percentage of your credit limit will decrease your score, goes the reason, and opening new credit sources with high limits is the best way to increase your scores rapidly. So keep in mind, it takes time for your positive payment history to start increasing your score. It is a high available credit being added, which results in immediate and substantial credit score increase. I get the question all the time, so Paul, I'm going to get this credit card, I'm getting this credit card, so when will I see my score improvement? Or I'm paying down a credit card, when will I see my score improvement? People say, well, I'm going to pay it down because the score simulator says that my score is going to go up by 50 points once I pay this thing down. They pay it down, and then they call the loan officer the next day, and they get no score improvement, and they scratch your head and wonder why. And the reason is because these creditors do not report to the credit bureaus on a daily basis. You should always pay down your, if you're targeting to run your credit on a certain date or a certain result to buy a certain thing, a car or a house, what you want to do is you want to pay down your balance limit ratios at least 30 days in advance. Use Credit Karma freecreditreport.com as your monitoring mechanism during the time frame, then you'll know exactly when that payment posts as you watch your score over that time, or you watch your balance over that time. So it's a great tool to help you accomplish your goal. So in paying down things, use that as a tool, and then you can give an indication then to the mortgage broker as to when to rerun the score. So in summary, the secrets of loan approval are: have the inaccurate, negative information disputed and deleted to ensure you have no negative items reporting within the last 24 months. And add new credit to establish recent positive history and high available credit. In other words, going back to those limits, high available credit to quickly increase your score. This combination of deleting negative and adding positive will give you the credit boost that you're looking for to qualify for most loans. I did go through the different scoring models. I touched on it with FICO versus Vantage 3. There are hundreds of scoring models out there. I don't want to get into all that stuff, but just know that what really matters is whoever's lending you the money, what does their scoring model say? So lenders, mortgage people use FICO as of today. So different industries have different scoring models. So again, if you didn't get it in the beginning, here is my contact information. And also on the My Credit Team website, if you do need your own credit repaired, there's a schedule. You can go in there and just schedule an appointment with me. And I think, Gary, we had a promo code before. If I recall what it was it Gary W. or was it Wilson?
Yeah, I do recall that. We can find out from Beverly what it was. I don't recall the exact, what the code was. But
well, yeah, I'll make one right now. Gary W. It'll be active in about 20 minutes after I'm done with this. And anyone who goes onto my website, if you put a promo code in, put in Gary W. Then I know you came from this particular session.
Okay. A couple things too, Paul, is I believe we have a profile for you on our community site as a vendor. So, which is good news because I see a couple questions coming in, and one of them is, can you service people in any state? That was one of the questions, and another one was, can you service people from out of the U.S. who are wanting to do business in the U.S.? And the reason that's important is we actually have some Canadians on the call here because I've taught up there, and in fact we have some people from Ottawa. So I know that they're hopefully thrilled for Pittsburgh beating Nashville, but then we also have people from Nashville on the webinar. So in any case, so a couple of questions about, can you service people from all the states in the U.S., and what about foreigners who are looking to establish credit in the states so that they can buy investment properties? If you can touch on that, I saw those come in a couple times here from people.
Oh, congratulations to the people from Nashville. I love the fact that the franchise is so young and they've done so well. As for states, yes, I do business in all 50 states, and I think I have done business in all 50 states. Georgia's a little trickier because Georgia, there's actually a law against not doing credit repair. It's a misdemeanor down there, but I work my way around that because there's always a house involved. So it's the credit education. Oftentimes I'll have the real estate investor pay for the credit education because it's part of the house or it's part of the contract. That works its way around it. But all the other 49 states is not as much of a big deal. As far as Canada, I haven't done business in Canada yet. I understand the workings of Experian are similar in Canada that they are in the United States. So we're just going to send our forms off to somebody, just a different address. TransUnion and Equifax, I understand it's a little bit different animal. If there is a large need, I will look more into it. I belong to a large consortium of credit repair organizations across the United States. We meet on a regular basis, and there is a section that I can go and find information about doing business in Canada. So it is possible. So if we're talking about a lot of business, I would entertain it.
Okay. Yeah, we have a lot of foreigners investing in the States. In fact, it's um, I personally know Canadians and people from certain South Africa, Israel, several countries in South America, and I know they're always the state laws from state to state when it comes to how foreigners purchase U.S. property, but inevitably they're all being asked to provide to have funding, here in the States. In other words, not only have cash on hand, but to be able to get credit from U.S. creditors, from U.S. lenders like Chase, for example, does a lot of international, provides funding for international investors. So I appreciate that. That could be something that I think is going to grow, Paul, over time, not just for us in our community here, but we're seeing it across the board. It's just like I'm in Denver right now, and there's a lot of international investors here in Denver. But in any case, another question from Sarah. Hey, Sarah Anderson is asking, how do you reestablish new credit? Is this taking out new credit lines? And I think we covered it, but go ahead, and Paul, if you wouldn't mind elaborate on that a little bit, that might help.
Reestablishing new credit really is dependent upon where your credit starts at any given time. In other words, you just can't go out and apply for an American Express card with a 490 credit score because you'll get turned down. Now, independent of what I've already presented in the presentation, here's another little tip for you. This is a writer-downer. There's a site called bankrate.com. I don't get a dime for saying this from them. They don't know me from Adam, but they have a really nice tool. It's bankrate.com. They've got a really nice tool for the credit cards, and the reason I like them is because, from what I understand, at least this is the way it was years ago. They may have changed it, but from what I understand, when they pull your credit report on Bankrate, it's one pool, and then you can select between 3 or 4 different types of cards. You can select the card that has the frequent flyer miles or not, or the one without the application fee, or the one that has a higher monthly rate but no application fee, and so on. So the Bankrate is a really nice comparative tool to help you to select a card. It's not going to have the Jewelers Club card that I put up on the screen here this evening. And if you want that, to send me a notification, paul@mycreditteam.com, and I'll send you the direct link, and that way you can save some money. Because I think if you go directly to Jewelers Club, it costs $150 for application, but if you do it through us, it's $99. And if you use my link, because I get a discount because I'm a credit repair company. Hopefully that answered your question.
Yeah, I appreciate that. And here's another one from Brian. Hey, Brian, how you doing? Brian Cardos. Okay, let's see. I missed a $4 doctor payment. Oh, I've had this happen myself, Paul. I missed a $44 doctor payment. Somehow, it went over 90 days. Just received the collection. My doctor never called me about it. How will this my credit? So I know that happened to me. I don't use. I like to use cash. You have a credit card that when you rent cars and so forth and so on. Well, I forgot one time. I travel constantly, so I'm not always getting my mail. And it went just over that 30-day point, and sure enough, it caused a little ding on my credit rating. But can you help Brian out? So he's past 90. It's only $44. It's a doctor, but the doctor obviously turned it over and never even called Brian. So any suggestion there?
Yes, Brian, I feel for you, and this is quite common. Doctor's offices, you may want to talk to the people at the front desk of the doctor's office, but that's neither here nor there now. I mean, it's on your credit report. Once they turn it over for collection, and that collection company gets their hooks into it, the damage is done. The damage is done as far as your credit report is concerned. Now, the only question becomes, is it recent or is it old? If it's older, when I say old, older than 6 months, like you just noticed it now, even though it's been on there for a year, then you're kind of at a crossroads. When it gets more than 6 months, see, here's what you'll be toiling with as far as score is concerned. If you pay off an old doctor's bill that's $44 within the first 6 months, it's not old, it's still new. So it will have no negligible effect on your credit report. So you might get away with just paying it if it's still within the 6-month time frame. Now when we go beyond 6 months, it starts to have a dimmer light shown on it as far as score is concerned. Now when you pay it,
Oop. Hey, Paul, if you can hear me, you just went silent right in the middle of your response there. Let's give this a second because we're right at the tail end there. Everybody hang on just for a second. I'm going to text Paul. He may have had a wire come unplugged or something. Let's see. Let's see if this will work. Hang on one second. You just went. Okay. Hey, Paul, if you can hear me, not sure what happened here. Sure, we're seeing your screen. Let's do this. Send privately. Send answer to author question available when answer has been entered. Okay. So, Paul, I'm going to type in a message for you. Paul, you just lost your audio. Okay, so Paul, if you can see that. For everybody else, the good news is we pretty much got through to the end. How about that? Let me just check. So Brian just entered a new statement here. Question, okay, just happened in the last 14 days. So Brian, that sounds like good news. I think from what Paul said, you're going to be okay. It's definitely well within 6 months. If you just pay it off, credit collector wants 64. I guess they're going to charge you $20 on top of the 44. Brian, what I would do, you know what? I would actually go to the doctor's office or send them a check for the 44. Okay, because this happened to me several years ago, and actually just paid whoever it was directly, and they took care of it. And then actually, you know, they took it. I guess they rescinded it from the collector. I don't know that it did or didn't damage my credit, but I didn't have to pay any overage, you know. So hopefully that helps you there. Let's see if we got any more questions here. It looks like Paul's trying to reboot. And just so everybody knows, this is the kind of thing you want to share with your clients. One of the main reasons we did this tonight is the subject has come up a lot, you know, getting funding for your clients. These are the kind of things you can share with them. It doesn't cost you a thing, and quite frankly, a lot of it doesn't cost them anything either. And it'll help improve their odds of getting approvals, particularly if they're buying rentals. You know, let's say that you got a landlord aggressively buying rentals. Over time, they're going to have a lot of credit inquiries, and of course, there's going to show these new loans are going to show on their credit report. Now, the good news is, shows the additional income. In other words, the banks are going to account for the additional income. However, maintaining clean credit and using these techniques, I've had a number of clients over the year do this, and it does change. I mean, what we're doing right now wasn't necessarily what we did, say, 5 years ago. Or even you know 5 or 10 years ago. You'd be amazed at how things change in the credit world. So just keep that in mind. You really have to kind of stay on top of your game. I would say you should check your own credit on a regular basis, but you should also encourage your clients to stay on top of theirs. Like I teach in classes, I can always tell a good client because they actually know their credit score, and I know I've got a pretty good shot of getting them in a property when they know what their credit score is. Okay, let's see here. Let me double check something here. Okay, I think that's it, guys. Listen, if you guys could all just say thanks, Paul, type in a thank you to Paul. Also, go to the community site. You'll see his information there, and he has his contact information right here online. mycreditteam.com. There's the phone number, 724-664-6078. He does service everyone in the States. And for the Canadians online here, and if you're also from Ireland or England, excuse me, Great Britain, excuse me, You know, I've taught there. Some of you might be on. A lot of you have invested already in the States. You're getting United States banks from United States banks, loans from United States banks. You know, what I want to tell you is this may help them too. If you think about the way credit cards are, they're international, okay? So, in any case, thanks guys for being on board tonight. For those of you who are going to want to learn about how to put on the classroom strategy that, quite frankly, resulted in me making $800,000 a year in commissions, I will see you all next week. Please be prepared with pencil and paper. I'm going to likely send you some stuff after that webinar. It's a specialized webinar. And we will see you then. In the meantime, I hope you have a great rest of the week, and God bless you all. Okay, there's Paul waving at me. Hey, Paul. Yeah, we lost your audio. I'm not sure what happened, but we're wrapping things up, so we got the information out. Any final words, Paul? Just email Beverly, and we'll get him in the email that goes out tomorrow to the group. So, Paul, thanks again, brother. I appreciate that. That was big help. I always learn something from you every time you come on, man. I really appreciate it. And everybody's saying we're getting a lot of thanks here. Thank you, thank you. Thank you, Paul. Let's see. This is let's see. That is what I would. Yeah. So Paul's saying Brian's saying that's what I was thinking. We've got a lot of thank yous, Paul. So thanks you, and let's do this again in another couple of months. You know, I know you've got a lot of subjects to. I'd love to have you on board again because this is exactly what our guys need. You know. Okay. Oh, so Paul says, does Paul do loans or just credit? So that was Shan. So Paul, I've always known Paul as a credit person, but Paul absolutely used his own lending company. If you have questions on lending, I would reach out to him, Shannon, send him a message. You've got his website there. You can send him a message that way, and he can definitely connect you with the right lenders. He's connected in all 50 states, so I would absolutely use him. Okay, Seth has another one here. Let's see, Seth. Thank you, Paul, for your time. I appreciate it. Have a good night. Okay, that's awesome. Sarah, thank you, thank you, thank you. We got a lot of good guys here. Really appreciate what you just did, Paul. So thanks for me too, Paul. I hope you all have a wonderful night, a great week, and we will see you next time. Okay, bye-bye.